Good day, Junior Tikkies. I'm Mrs. Brimacombe. We are now going to look at the next part of this question. Question 1, Statement of Financial Position. Remember now, in our first video, we looked at how do we approach this question, and we focused on the adjustments related to calculating the correct net profit after tax. And if you remember correctly in this question, you not only need to calculate the correct net profit after tax, but you also need to complete the statement of financial position. So now this video is going to focus on completing the correct net profit after tax and completing the statement of financial position. A reminder, the incorrect net profit before tax were given to you. The first adjustment we had to complete for audit fees. This will have a positive effect on the net profit. This is why we need to say plus. Our second adjustment, we needed to calculate the interest on loan. That would have a negative effect on the net profit. This is why it must be shown in brackets. On your answer booklet, make sure that you show your calculations to earn part marks. Adjustment number 3, we had to calculate the rent income. The rent was received in advance, which means we had to take out the rent, which will negatively affect the net profit. This is why it must be indicated with a minus. Income tax was calculated. Income tax is an expense. Because it's an expense, it will decrease your net profit. Again, anything that decreases the net profit must be shown minus, or it can be in accounting, it can be shown in brackets. Now we can calculate the correct net profit after tax. Do not forget to include that incorrect net profit before tax as part of your calculation. This is now very important. Make sure that you take your answer, which you have calculated, to the retained income note. That will be your net profit after tax. If we now look at the retained income note on 30 June 2021, the balance at the end were given to you. We have calculated the correct net profit after tax. Now, if we look at the information, 26,000 shares were repurchased on the 1st of July 2020 at R3 above the average share price. This means that we need to indicate shares repurchased, 26,000 shares were repurchased at R3 per share, and that must be shown in brackets. The business did not pay an interim dividend during 2021 financial year. A final dividend of 65 cents per share was declared on 30 June 2021. So if we now look at the retained income, remember that your retained income consists out of your dividends on ordinary shares, which consists out of your interim dividend, that which was paid during the year, and your final dividend, which was recommended at the end of the accounting period. Now, in this question, which is different compared to before, there were not any interim dividend which was paid. This means that the only thing that we're going to have in our retained income note is the final dividend which was recommended. And that means we're going to take 65 cents, and now we need to times that by the number of shares in issue. And they told us 1.8 million shares were in issue on 30 June 2021, which is the end of the accounting period. Do not forget that the final dividend which was recommended should also appear as part of your current liabilities in trade and other payables, or it can appear on the face of the balance sheet. So whatever you have calculated in here, make sure that you transfer it correctly to the statement of financial position. If we now look at information H, the following financial indicators were calculated on 30 June 2021. They provided us with the asset test ratio and the net asset value per share. So if I look now at the equity and liability section, we've got the retained income which is given to us. You should know that shareholders' equity would always consist out of ordinary share capital plus retained income. So now we need to use the financial indicators to find missing figures. It is crucial that you understand. Financial indicators, you should be able to calculate it from the beginning to the end and from the end back to the beginning. Because you will get questions where you are given the financial indicators and you need to find the figures. If we look at the net asset value now, we know that the net asset value is calculated by taking the shareholders' equity divided by the number of shares in issue. Now the shareholders' equity is my X, which is unknown. I know that 1.8 million shares were in issue on 30 June 2021, and they provided me with the net asset value 540 cents. This means we can solve X to calculate the total shareholders' equity. Once we've got the total shareholders' equity, we can now calculate the ordinary share capital, and that will be the balancing figure. If you take the total shareholders' equity minus the retained income equals ordinary share capital. Please take note of my approach. As I am completing the statement of financial position, I'm filling in what I've got, trying to find the missing pieces. If we now look at the statement of financial position and we look now at information A, the list of balances, tick off what you've got and fill in the information where it's supposed to go. Ordinary share capital and retained income, we've solved that. Mortgage loan, make sure that you show the amount in brackets. Inventories forms part of current assets. Trade and other receivables, we've got net trade debtors, so make sure that you show the calculations in brackets and tick off. Bank overdraft is a question mark. Petty cash and cash float is a question mark. Creditors control forms part of trade and other payables, so we're going to show it in brackets. Accrued income or income receivable forms part of trade and other receivables, and shareholders for dividends, we've already calculated it before and it was actually given to you, and this forms part of your current liabilities. Now, a reminder, adjustment number 1, we had the audit fees, which was prepaid. Make sure that you use your same answer in your previous question and you transfer it correctly. Prepaid expense is a current asset, so it should be added to your trade and other receivables. Then we had interest on loan, and interest was capitalized, which means it should be added to the loan account. This is why we're going to say plus 273,000. Now, while we're on the loan, if you look at the information given to you, it says there, a fixed monthly installment of 35,000 to cover the loan repayments and the interest has to be paid over the full period of the loan. Interest will decline over the life of the loan. The interest on loan budgeted for the next financial year is 234,000, which means we now need to find out what will be our capital repayment of the loan in the next financial year. So this is also asked differently than before. So how do we solve this now? If I look at our budgeted interest, which is 234,000, if we divide it by 12, it means that our interest will be 19,500 per month. Now, the fixed monthly installment is 35,000. If we subtract that 19,500 from the 35,000, it means that the capital repayment per month will be 15,500. And over 12 months, that will equal 186,000. This means we now need to subtract 186,000 from the non-current liabilities, and that will go to your short-term liabilities under current liabilities, current portion of loan. Now we can calculate the total for the mortgage loan, which is 3,842,000, and that will equal the non-current liabilities. If we look at the rent, it was received in advance. Income received in advance is a liability, so this must go to trade and other payables. And then we had our SARS income tax. We still owed 85,250, which means this forms part of our current liabilities. In our first question, you needed to calculate the value of a closing stock using FIFO. Make sure that you take your answer that you've calculated, and this will now be subtracted from the inventories. Then we had adjustment number E. Debtors with credit balances totaling 11,000 must be transferred to the creditor's ledger. Now this is something that we often get right. Which we often get wrong. The debtor with a credit balance needs to be transferred, which means it must be taken out. But by taking it out of the debtor's control account, this will have a positive effect on the debtors. For every debit, there's a credit. Creditor's control will be credited, which means it will have a positive effect on the liabilities. Trade and other receivables plus 11,000, and then current liabilities, trade and other payables plus 11,000. On 30 June 2021, GMO Limited returned 10 ladies' coats to the supplier. Bargain wholesalers, the selling price was 1,750 each. The markup was 25% on cost. No entry has been made. We now first need to calculate the cost. This was returned to our supplier. So to calculate the cost, we need to say times 100 divided by 125. And then we need to times it by 10 because 10 items was returned to the supplier. This means that we're going to say minus 14,000 with inventories because we've returned that. And then we're also going to say minus 14,000 in trade and other payables. If we now look at adjustment number H, the following indicators were calculated on 30 June. We have the asset test ratio, which we haven't used yet. There's a reason why they provided it to me. If I look at what has been given to me, they provided me with the current assets. So now I can solve inventories. I've done all the adjustments. Asset test ratio means current assets minus inventories, or you can say trade and other receivables plus cash and cash equivalents. Now cash and cash equivalents is still unknown. So I'm going to use now the asset test ratio, the current assets and the inventories that I've just calculated to find out what is the total current liabilities. Again, make sure with financial indicators that you know how to find amounts if the financial indicator, if the answer is given to you. So if I look now at the asset test ratio, it's my current assets minus inventories divided by 1,2 equals my current liabilities. If I now solve trade and other payables, then bank overdraft becomes the balancing figure. Once I've calculated now the shareholders' equity, we've got the retained income, we've got shareholders' equity, we've got non-current liabilities, and we do have the current liabilities. We can now solve the total equity and liabilities. You should know that total equity and liabilities should equal your total assets. So what can I solve next? If we look now at trade and other receivables, we've done all the adjustments so we can close the brackets. You should know that the current assets consist out of inventories, trade and other receivables, and cash equivalents. So cash and cash equivalents becomes now the balancing figure. It was not required of us to complete the non-current assets section, so this means we are now done with the statement of financial position. So please again take note of our approach. First, we looked at, for this question, we started with how do we approach the question. Then we looked at the adjustments because we needed to make changes in the calculating the correct net profit after tax, and we needed to make those changes to the balance sheet. Make sure that you understand financial indicators can be used to find missing figures. Advise, fill in the information which you've got and then start filling in the missing pieces. Next, we're going to look at question number 2. Thank you very much. I hope you have a wonderful day.